Hey family, Dad here. Hope you're having a great day. On this video, I just want to share how I ended up with an 800 plus FICO credit score. Now, according to the consumerfinance.gov website, what is a credit score? A credit score is a prediction of your credit behavior, such as how likely you are to pay back a loan on time. Now, the factors that impact your credit score are kind of your bill paying history. Are you paying your bills on time? Are you paying the full amount? Are you paying the minimum amount? How much current unpaid debt you have, and the number and types of loan accounts you have, and how long have you had these loan accounts open for, and how much available credit you're using, and the amount of new applications for credit you're applying for. So several factors that affect and impact your credit score. Now, credit scores can range from 300 to 850, I think is the max. And to share a little background about me and my credit history, I'm 48 years old. I'm a dad with 2 kids. I've had an 800 plus credit score now for about 10 to 12 years. And I can tell you, it takes a little time to build up. If you started in college getting credit cards and whatnot, you probably have, a pretty decent credit score. My kids have credit scores roughly in the 700s. Some may have really bad credit just because, they didn't know the responsibilities. They weren't taught kind of responsibilities of maintaining good credit, paying your credit card bills on time and whatnot. So my thoughts is it's really important to kind of get educated on that at an early age. And, once you're educated at an early age, you can maintain and grow your credit score. So like I said, it took years to build up a credit score of 800 plus. I think the first time I checked my credit score was when I bought my first house in 2006. I think it was in the low 700s. I've never, up until that point, I've never missed a credit card payment or like a bill payment, utility payment in my life. Having that score really helped getting my mortgage and a mortgage rate. Roughly it was about 5%, 5.5%, I think, during that time. This whole kind of, building my credit score started in college. When I walked on campus, a whole bunch of credit card banks were throwing credit card applications to your face, get you signed up. And, I fell victim to it. I signed up for a couple of credit cards, paid the minimums on them, every time I got a statement, which was a mistake. I should have, been more disciplined and pay them off in full, but I didn't know, But one thing is that impacts your credit score is that you at least pay the minimum balance that they want every month. If you don't do that, and you pay nothing, that can impact your credit score as well. So over time, once I graduated college, I applied for more credit cards, paid the minimums. Again, I didn't pay the whole thing off, which got me into trouble. Eventually, in '06, I got divorced. And after my divorce, I ended up having roughly about $30,000 in credit card debt. Again, that as long as I paid the minimums, that didn't really impact my credit score. The amount of revolving credit that I had, I think it was roughly around 50%. I mean, it impacted it a little bit, but clearly it didn't impact it a lot. So since my divorce, I've been a lot more disciplined, paying off the minimums or all of it, on my credit cards. With low spending. I didn't really get aggressive. I didn't spend beyond my means or anything like that post-divorce. With other revolving credits such as car payment or even the mortgage, I've been slow and steady, just paying the credit on time and at least the minimum. And as I've gotten older, every line of credit that I have, I pay off everything every month. Car loans and mortgages, I do pay the monthly payments on time, and I'll pay additional principal. On top of that, if I had a car payment, I would definitely throw extra onto it so I can just pay it off sooner. Same thing with the mortgage. If I have a little bit, I'll just throw extra into the principal. Not consistently, but you know, maybe 4, 5, 6 times a year. So I've maintained this habit, you know, for the past 17 years, and gradually my credit score has gone up to 800 plus. It's never been, you know, bad. It's always hovered around 700, like I said, in my first half of my adult life. Now today, looking at my credit card apps, so I got like an Amex, I got a Capital One Visa, I got a Discover card. My credit score ranges from 834 to 849. We all know, well, if you don't know, there's 3 credit reporting companies. There's TransUnion, there's Experian, and Equifax. TransUnion, I have an 848. Experian, I have 849. Again, I don't go crazy on debt, and you know, I pay it off quickly or on time. And just kind of word of encouragement, word of advice is, you know, it does take time in being mindful in how you spend and save your money, along with, you know, how you apply and use your line of credit. Be very mindful of it. You know, don't go crazy. Don't go, you know, sprinting and applying and just thinking it's free money, because that's not how it works in life. It can get out of control if you don't pay attention to it. You got to be mindful. Pay attention to paying off all bills consistently and long term. Your credit score will be excellent if you follow just consistency of paying it off regularly and paying it off in whole. And doing that will raise your credit score, and you'll get the best interest rates when borrowing credit for like large purchases, such as a house or a car. So that's my thoughts. You know, tell me yours, leave a comment, subscribe to my channel. Again, these are my perspectives and views. I'm not a certified professional, I'm just a dad. That's all I got. Stay safe, stay positive, and be happy. Love you, Dad.